Hello, I'd like to welcome you all to volume 28 of the Bellringer. We're very excited to have WendyO with us today to talk about retail investment in the cryptoverse. What do you need to know and how to get started? This is extremely topical. As you know, we all saw the news today that Visa and MasterCard are pulling back from cryptocurrency. So we're going to talk about how this impacts, what do you need to know, what are the perils and what are the joys in getting involved with the cryptoverse. Now, WendyO, for those who are not familiar with her, became interested in cryptocurrency and blockchain in 2017 when she realized that blockchain technology had the potential to revolutionize, improve the quality of life for all classes, and transform the traditional finance industry, or TradFi as we're all calling it now. Since 2018, she has been involved in the cryptocurrency space full-time and began the O Show, growing her network and team to become the largest female voice in this space, with millions of views every month across multiple platforms. And we're delighted to welcome you, WendyO.
Thank you so much for having me. I am super excited to represent retail and talk about crypto, Bitcoin, NFTs, whatever it is you need to know.
Yeah, that's great. So first off, why don't we talk a bit about what are the first steps you need to take when starting in retail investment in the crypto space?
So the first step that I like to talk about to my audience is always go and read the Bitcoin white paper. Bitcoin was created out of 2008 during the very, very awful housing crash. And one of the reasons why it was created is to essentially remove the middleman. The middleman caused a lot of problems with all of the loans and all of the different things that had happened back then. So Satoshi created Bitcoin and wrote a white paper indicating what it is. Bitcoin is essentially digital cash to facilitate P2P transactions. You can stay partially anonymous. It's open source. So it's free. You can go ahead and read it and really understand why it was created. It is a bit technical, can be hard to understand. And that's so great that we have Google. Google is awesome because you can go ahead and Google terms that you don't necessarily know. And as a retail investor, because we're not accredited and some of us are not able to get accredited, we have to take advantage of some of these opportunities now. And the best way we can do that is with self-education. So read the Bitcoin white paper, understand what it means, and then you can start doing some additional education into crypto.
Okay. Well, why don't you speak a little bit? What's the difference in investing in the crypto space compared with other risky areas of investment?
So with crypto, you can access the crypto markets 24/7, 365. With traditional markets, you can't do that. Our markets never stop. And in fact, a lot of times people feel that they have to go through a broker. I remember back in 2017, I was interested in trading stocks and I didn't necessarily know too much about some of the stock stock apps that were available because I wasn't brought up in a traditional financial household. We didn't learn about it in school. So I went in like one of these fancy places. They're like, we need $25,000. I was like, I don't have $25,000. So these firms, they charge you quite a bit of money because they want to manage your stuff for you, which is fine. That's their business. But their markets are not open on weekends. They're not open on holidays. Also, too, there's really no minimum requirement to participate in the crypto ecosystem. You can buy a portion of a Bitcoin. If you got $20, you can dollar cost average into Bitcoin. If you have $100, you can start trading or however much that is. There's really no barrier to entry. And again, our markets are open 24/7, 365.
Okay. Well, we understand the markets are open, but it seems to me as a layperson, very risky market right now. The value of Bitcoin was, when it started out in 2008 was what, $15, whatever it is. Then it went much, much higher. And now it seems to be on a trajectory downwards. How does an investor or retail investor, a layperson, look at that? I mean, how do we assess whether or not it's a good investment or not?
So essentially, that's why you want to start back and you want to read the Bitcoin white paper and you want to understand what Bitcoin is and what its intended purpose is. A lot of people like to refer to it as deflationary. The US dollar holds a lot of inflation to it, or the way our financial markets work in the US. We all know the cost of living is skyrocketed, especially in LA County, Orange County, California in general. But with Bitcoin, if you're somebody that wants to like passively invest in it, like dollar cost averaging, fantastic. If you want to actively trade, fantastic. It really kind of depends what your threshold is. It depends what your risk is. Because when we take a look at some of these traditional stocks and some of these traditional markets, these are all companies too. Just because they've been around a little bit longer than Bitcoin doesn't mean that it's not as risky. When we take a look at the term investment, investment is not guaranteed that you're going to make money. There's always winners and losers. And I can attest that my portfolio, my 401k portfolio, when I was working my 9 to 5 back in 2017, it's kind of stayed at the same value that it has then. My Bitcoin purchases from 2017 are still up. So someone might argue that Bitcoin has performed a lot better than traditional markets and stocks.
Right. But it's almost like a high yield investment, wouldn't you say, where it's a higher risk, but a higher reward?
It could be. I mean, if you look at the price action of Bitcoin, we still operate on a 4-year cycle, and that's due to the Bitcoin halvening. That's again
Okay.
something that some of you guys would need to do additional research on,
Right.
because we try to operate in a true decentralized economy. We like to take responsibility for our own actions. So some people might say that, some people call it hard money. And the beautiful thing about Bitcoin is that it can be whatever it is you want it to be. So it kind of depends on the person, how much risk tolerance you have. I also too, if you're a retail investor, you got to know what disposable income is, and that basically means, like, let's say you go to Starbucks 5 times a week, $20 each trip. You say, you know what, I want to cut one of those visits out, and you have that additional capital that you are allocating for a fun thing that you can then take to passively invest in Bitcoin if that suits your risk.
Mm-hmm. That is very interesting, and I think that is definitely to allocate what you need. And obviously, it is riskier than T-bills or something like that. However, what do you think are some good opportunities out there in regards to the Bitcoin space with what are high opportunity investments?
So me personally, I am a very big advocate of people doing self-education and seeing what works for them. I advocate to my audience all the time, creating an investing journal or a trading journal, write your goals, your disposable income, your risk. Are you actively trading? Are you setting a stop loss when you're going to take profit? And the beautiful thing about Bitcoin is you get to pick whatever works for you. For example, with a 401k or an IRA, there's certain times that you're allowed to take profit, or certain times that you can remove funds from that traditional financial product, because if you don't, you can get absolutely reamed by taxes,
Right.
or there's certain laws that allow you to do X but not Y. And with Bitcoin, you get to make that choice. And if you're trading large amounts or investing large amounts, I highly recommend you find a CPA who is well versed in this and talk to them about a good like when it makes sense to consider taking profits or allocating funds. They're going to know a lot more than me.
Okay. Right now we're in obviously a bear market, even obviously for the Bitcoin space. Is it a good time to invest?
I am a firm believer it is not a good idea to chase green candles. And if you read charts, that basically means you don't want to buy the tops of stuff. It's worth paying attention to things when the market is down, because you're able to get a better deal. And if you're somebody who's an avid, a couponer, or somebody who likes to save money, you buy when the prices are low. You don't buy when the prices are high. So paying attention to Bitcoin in a bear market and practicing self-education and determining when you may want to enter would be a good time in a bear market, in my opinion. But again, that's not financial advice.
When you're talking, I understand, and I appreciate that caveat. When you're talking about investing in different crypto areas and such, is there any new areas that are popping out to you that you could say, Stacey, this is a growing area? I mean, everybody here talks about the metaverse, Web3, right, and all of that, but what's the next gen?
So I really like the NFT market. And right now, the current market we have, it's not really built out yet. NFTs were initially created for artists, creators, and people to own their own creation, whatever it is you decide to make. And a lot of people don't understand that, like when we're talking about movie rights, those are generally pushed out and then they're pieced out and they're sold on on the second market. There's a whole entire market for it. And NFTs allow people to buy movie rights or licensing rights or IP rights, or part of a song or part of a movie, and you can actually do that without having to do it like some of these guys on the secondary markets do. So it's a really great opportunity. I think that people should pay attention to that, but you should pay attention. You should understand how it works and self-educate before you just jump in and buy some sort of turtle JPEG or something silly like that. Right. Look for things that have valid utility. Look for things that resonate with you. Right.
Well, there's been everything. So just to come back, so if I wanted to purchase an NFT, I don't necessarily own it in entirety. I own it in a piece of it.
Well, it depends what type of NFT you're buying. If you're buying
looking at art.
Yeah. So let's say, for example, you want to buy an NFT that is created by an artist, then that would be a
Right.
different type of investment. You're basically buying that piece of intangible art that lives on the blockchain to either represent a tangible piece or just to support your artist. I don't know about you, but I like to go to like flea markets or like, different, whatever, and support local artists because they've got stuff set up there. So I'll buy a piece of art and not expect a return on it. And then if the artist ends up being, popping off later on, then I might be able to make some money on it if I want to sell it. So there's different type of NFT investors. There's some
Right.
that are investing because they support the artist, they like the piece, and there's other that are buying to sell, which kind of people do on eBay and Craigslist and those types of marketplaces also.
Right. This is true. So right now, there's a lot being talked about regulation and legislation and all of that. How necessary is it that this market gets the regulation and legislation?
Right now, it's very important for Congress to step in and kind of regulate the SEC. Is I do believe the SEC has overstepped their bounds when it comes to cryptocurrency. We do need some sort of guidelines, and the SEC has failed to do that. They just kind of want to punish people after the fact, which is actually very dangerous to American capitalism. When I talk about American capitalism, I'm talking about small businesses. I'm talking about entrepreneurs. I'm not talking about the corporate capitalism. It's a little bit different. And I think it's important that we continue to allow people to build in a legal but ethical manner. And the SEC stated, come in, report to us, talk to us, and we'll help you get through this, when in fact, they've just kind of terrorized specific companies for doing that. So we do need some intervention from Congress, and we do need some sort of guidance from the SEC, I guess. But at the same time, we need regulation that's going to build a positive industry for us, but also protect retail to an extent, but not too much protection.
So in order to, we have regulation that doesn't stifle innovation.
Correct. Yes.
And obviously there is a lot of press about like FTX or Coinbase, Celsius, all of that.
Mm-hmm.
How do you protect yourself as an investor from bad actors?
Well, it's kind of hard because, there's bad actors in every industry. I believe since 2000, the banking industry has paid over $340 billion in fines, which is 1/3 of the crypto market cap. So it's important to note there's bad actors in every industry.
I
So
know.
it's important to talk about, to bring this up well, because people just hear crypto, Bitcoin, NFTs, it's all scams. But
Right.
really, there's not scams, there's bad actors. So what can you do to protect yourself? Some of my favorite tip and trick is understanding what self-sovereignty is, understanding how to custody your Bitcoin properly, your cryptocurrency properly. You don't want to use an exchange as a bank. They are not banks. They are not FDIC insured. They're not for that. The only time you should maybe consider leaving your cryptocurrency on an exchange is if you understand the risks, and if that exchange goes to zero, you're okay with that. Or if you're actively trading and you understand how that works. If you're somebody who's just dollar cost averaging, you may want to consider doing so after you know how to custody your own coins. So there's different things that we can do. Unfortunately, we do need centralized exchanges as on-ramps for folks that are brand new into the industry and to inject fresh capital into fiat. So it's a bit of a rock and a hard place. Right now. So doing your due diligence is very important. Don't use some random exchange that you found through a friend. Make sure that the exchange is reputable. Maybe go on Twitter, see, start to do some due diligence there. Go to their websites, look at the teams, look at their disclosures. All of those things are very important. Join their communities, ask questions.
Well, Wendy, I think we've given a very good taste of the issues that are addressed when you're talking about investing in crypto. And I'm delighted to say that you will be participating in our After the Bell panel discussion in Newport Beach, California at the end of March. And we'll be touching more on this subject and getting into a little bit more detail. Everyone, I'd like to first thank Wendy. I'd like to thank all of you for listening to this issue of the Bellringer, and we look forward to seeing you at the next one. Have a great day and invest wisely. Bye-bye.